So you've paid off your debt and built your emergency fund. Congratulations. You might be thinking that the hard part is over. You can just kick back now and enjoy your newfound financial freedom. Right, well, not so fast. If you want to set yourself up for long-term success, there are some important things you need to do next. And if you don't do them, it could cost you dearly. So keep watching to find out what they are. After you pay off your debt and build an emergency fund, the next thing you should do is start investing. This is a great way to grow your money and set yourself up for financial freedom. There are a lot of different ways you can invest your money. It can be confusing to know where to start. But don't worry, we're here to help. We'll walk you through some of the most popular and effective ways to invest your money, so you can get started on the path to financial freedom. Before we dive into that though, let's take a step back and talk about why investing is so important. Investing is essential if you want to grow your wealth and achieve your financial goals. When you invest, you're essentially putting your money to work for you. Instead of letting your money sit in a bank account where it's losing value to inflation, you can invest it in assets that appreciate in value over time. This means that your money is working hard for you, even while you sleep. There are many different ways to invest your money. One of the most popular is stocks. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. Another popular investment option is bonds. Bonds are loans that you make to governments or corporations. When you buy a bond, you're lending money for a set period of time at a fixed interest rate. You can also invest in real estate. Real estate can be a great way to generate passive income and build wealth. It takes a lot of upfront work and capital. Investing in property can be a great long-term investment. Now that we've covered the basics of investing, let's look at some of the best places to invest your money. The first place to consider is the stock market. The stock market has historically been one of the best places to invest. Over the long term, stocks have generated an average annual return of around 10%. That means that if you invest $1,000 today, your investment could be worth over $2,000 in just 10 years. There are two ways you can invest in the stock market. You can do it directly by buying individual stocks, or you can invest in index funds or index funds and ETF. They're a great option for beginners because they offer diversification right out of the gate. Another great place to invest is in yourself. Investing in yourself is one of the best things you can do. The skills and knowledge you gain can pay off for years to come. There are a few ways you can invest in yourself. You can take courses, attend workshops, or read books. All of these things can help you learn new skills and stay up to date in your field. You can also invest in your health and well-being. Taking care of your body and mind is essential if you want to be successful. Eating healthy, exercising, and getting enough sleep can all help you perform at your best. Finally, you can invest in your relationships. The people you surround yourself with can have a big impact on your success. Nurturing your relationships with family and friends can provide you with the support you need to achieve your goals. The next place to consider is real estate. Real estate can be a great investment, but it does require a fair amount of capital. To get started, you can invest in rental properties, flipping houses, or raw land. Rental properties can provide you with a steady stream of income. Flipping houses can be a great way to make a quick profit. Raw land can be a good investment if you're patient. If you're interested in real estate, it's important to do your research and find a good real estate agent. A good real estate agent can help you find the right property at the right price. They can also help you navigate the complex world of real estate investing. If you're not ready to invest in property yet, you can still invest in real estate-related businesses. For example, you can invest in a company that renovates homes, or a company that builds apartment complexes. These types of businesses can provide you with exposure to the real estate market without having to invest in property directly. The next place to consider is cryptocurrency is a digital or virtual currency that is secured by cryptography. It is decentralized, meaning it is not subject to government or financial institution control. Bitcoin cryptocurrencies are often highly volatile, which makes them a risky investment. However, they also have the potential to generate high returns. If you're interested in investing in cryptocurrency, it's important to do your research and invest wisely. Do you want to invest more than you can afford to lose and be prepared for the possibility that the value of your investment may decline? Finally, the last place to consider is precious metals. Precious metals such as gold and silver have been valued for centuries. They're often seen as a safe investment during times of economic uncertainty. You can invest in precious metals by purchasing coins, bullion, or jewelry. Gold and silver can be a good way to diversify your portfolio, but they're not without risks. The value of precious metals can be affected by a variety of factors, including economic conditions, inflation, and market speculation. We've covered a lot of ground in this video. but it's important to remember that everyone's financial situation is unique. There's no one-size-fits-all approach to investing. What works for one person may not work for another. That's why it's important to do your research and find what's best for you. When choosing where to invest, it's important to consider your financial situation, your goals, and your risk tolerance. How much money can you afford to invest? What are you hoping to achieve with your investments? And how much risk are you comfortable taking on? Once you have a good understanding of your own financial situation, you can start to narrow down your options. It's also important to remember that investing involves risk. No matter where you choose to invest, there is always the potential for loss. That's why it's important to diversify your investments and never put all your eggs in one basket. By spreading your investments across different asset classes, you can reduce your risk and increase your chances of success. Finally, it's important to be patient when investing. It's not a get-rich-quick scheme. It takes time to see results. Don't expect to become a millionaire overnight. Just invest consistently and be patient. Over time, you'll start to see results. As you may already know, there are a number of different ways to invest your money. In order to choose the best option for you, it's important to understand the risks and potential returns of each type of investment. By doing your research and seeking professional advice, you can develop an investment strategy that meets your unique needs and helps you reach your financial goals. The next thing you should do after paying off your debts and building an emergency fund is to start saving for retirement. Retirement may seem like a distant concern, especially if you're young, but it's never too early to start planning for your golden years. The earlier you start saving, the less you'll have to save each month to reach your goal. And the power of compound interest is truly amazing. Let's say you invest $100 a month starting at age 20. If you earn an average annual return of 8%, you'll have over $1 million by the time you reach 65. That's the power of starting early. So even if you can only afford to save a small amount each month, it's important to start as soon as possible. To get the most out of your savings, it's also important to take advantage of employer-sponsored retirement plans, especially those that offer a match. It's free money. If your employer offers a retirement plan, be sure to take advantage of it. Many employers will match a portion of their employees' contributions to their retirement accounts. This is essentially free money, so be sure to at least contribute enough to get the full match. While it's important to start saving for retirement as soon as possible, it's also important to be flexible. Life is unpredictable, and your retirement goals may change over time. Maybe you'll decide to retire early, or maybe you'll decide to work longer than you originally planned. That's fine. Just make sure to revisit your retirement plan regularly and make adjustments as needed. The most important thing is to start saving and then stick with it. Even small changes can add up to big results over time. In conclusion, paying off your debt and building an emergency fund are major financial milestones, but they're not the end of the journey. The next steps are just as important if you want to achieve long-term financial success. By investing your money, you can set yourself up for a comfortable future. Whether you choose to invest in the stock market, real estate, or something else, start investing as soon as possible. Take advantage of any employer-sponsored retirement plans and be flexible with your goals. Remember that everyone's situation is different, and what works for one person may not work for another. So do your research and find what's best for you. With a little planning and effort, you can set yourself up for a bright financial future. Thank you for watching. If you enjoyed the video, please hit the like button and subscribe for more content. If you have any questions or comments, please leave them below. Until next time, happy investing.